want to focus on overnight trading today for the next little bit. Um, Grateful each one of you could come. Glad you guys could make it. Also want to give a shout out to those of you watching this in the recording. Want to say hello to you guys, whether that's on YouTube or on the calendar on our website. Um, and also, I just want to give you a rundown of what we're hoping to accomplish today, what we want to talk about. Had several requests come in this week, hoping to chat about the Reaper, the Reaper version of the overnight trading strategy. I also did get that added to the website, so you can see up-to-date statistics on the Reaper, which is great. So I'm excited for you guys to take a look at that. We'll take a look at those together. And so I just want to make sure everybody's on the same page as far as the overnight trading strategy goes. Want to make sure everybody knows how to trade it effectively. So kind of the way I hope to go today is just do a general introduction, maybe 5 or 10 minutes on the overnight trading strategy, then spend 5 or 10 minutes making sure everyone knows how to trade it correctly. That might take up to 15 minutes. And then for the remainder of the webinar, we'll go over statistics. We'll go over the Reaper. That's kind of what I was hoping to do today. So let's go ahead and jump into this. As always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, let's go ahead and jump into this. So first, let me do a couple of things. For those that don't know this, we did complete we completed the journal on the not the journal, but the book. There is a book on the overnight trading strategy that we put together. So you can actually go to the members tab over here on the website and click on overnight trading, and this will pull up the journal. It'll kind of describe how the strategy works. In fact, you can go full screen too, which is kind of nice, and it just kind of flips through like a book, which is really nice. And yeah, you can read about like why we're trading this and kind of the concept behind it. You can go through, yeah, here's the entry. You've got the sequence multiplier. Here's the exit. And then I included a video that's kind of more brief on how to trade the strategy, which is great. So all that's there, which is super awesome. And then these are the results. These are up-to-date results on the overnight trading strategy. This includes the half Sydney session, stop loss version of the strategy, the full Sydney box stop loss, and then obviously the Reaper. So that's been added as of this afternoon. So you can come in here and view the statistics since May 1st. All of these are since May 1st. And then you've got, if you want to see actual trade results, you can come in here. This is like an order history of every single trade taken with the overnight trading strategy. So you can come in here and stay up to date. You can see, obviously, these are the trades that were taken today, these two rows. I actually did lose last night, but you can kind of see the up-to-date results. And then if you're ever wondering, like, how did I do versus how you did, where I am on the sequence, all that kind of stuff, that's included here. Here's the full Sydney box transaction history on the strategy. And then down here, you've got the Reaper, which I just added this afternoon. So you've got the results of the Reaper, which is really great. So for those of you that trade the Reaper version, you can come in here and make sure that you're up to date with how it's being traded and so on. So, okay, well, let's kind of go over the strategy, just kind of briefly cover what it is. And like I said, this shouldn't take too long. And then what I'd like to do is spend more time once we kind of get the basics out of the way here. I want to spend some more time going over the Reaper and the pros and cons of the different strategies to make sure that you know which one is best for you to trade. All right, so in a nutshell, basically the overnight trading strategy, it's called overnight because it takes advantage of the London session. And for most people trading the strategy, that would be those that live in the United States. So if you live in London, or if you live in Australia or New Zealand, which are common places to trade Forex, And we do have lots of members in the program that are from those places. This isn't really, it's kind of like a weird name, right? Like overnight trading strategy. That's not your overnight. That's like a day trade, right? So it's called the overnight just because contextually for me, it's an overnight trade, right? And we try to take advantage of the movements that happen and take place during the London session. So the London market is the king market out of all the movements that happen in a 24-hour period. Most of the trading volume that happens is during the London session. And London opens, for those that don't know this, it opens at 3 a.m. Eastern. That's in the middle of the night if you live in the United States, right? So anywhere between like midnight and 3 a.m. is when it opens. So it's very inconvenient timing if you like to trade the open of London and you live in the United States. But at the same time, that's when some of the most greatest volatility moves take place. And um, so because of that, I thought, well, how could we take advantage of those movements? Because some of those movements, you wake up the next morning and you're like, whoa, what happened? I missed this move on the market. I'd love to take advantage of that, right? And so that's kind of at least the preface of how the overnight trading strategy kind of came together because we're looking for lots of volatility. As a trader, you can make money so long as the market's moving. If it's going up, you can make money. If it's going down, you can make money. And so when are the times where the market's moving up or moving down the most? Typically during that London session or during the New York session, right? And they overlap each other. During that overlap is kind of like prime time, right? In fact, you're looking at the euro dollar here on a 15-minute chart, and so often you'll see the euro dollar make its biggest moves. In fact, I'm just going to point at this right here. My bet that this is probably the London session right here, or the New York session. My guess is this is probably London or New York right here. In fact, let's go ahead and use this thing called sessions. It's an indicator on TradingView where you can highlight the London and or any market you want. You can right now I have it set to Sydney. You can change this to London, and in fact, let's just do London for now. So everything in green is the London market. And so you'll note that a lot of the movements that begin the day or start the day off will begin in this green area. Like right here, a lot of the movements for the day started right here in this green. Right here, a lot of the movement for the day began right here. Right here, not so much. This was more of a consolidation day. Same thing right here. Even yesterday was kind of a consolidation day. The market's actually just generally been in consolidation for the last 2 or 3 trading days. Then if you pull up the Sydney session, which here, let's go ahead and pull that up. Not Sydney, but New York rather. The overlap where London and New York overlaps, that's when the biggest moves happen. So um, generally speaking. I mean, there's like right here, this was a move out of session that was a little bit abnormal, and that happens from time to time. But for the most part, most of the moves that you'll see are happening in here. Okay, so that is kind of the preface of this. Okay, so because we know that, um, the market is going to create volatility during that time, and we know this, okay? And right before London opens, there's going to be a period of not so great volatility. In fact, the market's going to be a little bit slow. It's going to consolidate, go sideways during that period of time before London opens. And so we call this the London Breakout. There's a lot of different names for it, but I think that's the most common thing to anticipate is when London opens. It's kind of like the biggest session of all sessions in the 24-hour period that Forex is open. And so when it opens, it comes from Sydney. So Sydney is open, and then Sydney hands off the torch, the trading torch to London, and London's kind of like the biggest one. So no offense to those in Sydney, but Sydney's kind of like out of the 4 different trading sessions, you got Sydney, Tokyo, New York, and London. Of those 4, they're bookends, right? So you got London, kind of the biggest trading session of the entire Forex market, where most of the volume takes place. And then Sydney, which doesn't move as much. It's still formidable. And you have seen times where the euro can actually move quite a bit, or the pound can move quite a bit during that Sydney session. But most of that movement is going to take place when London opens. So it's kind of a giant who takes on that torch, and boom, the market moves big time. Right. Okay, so that is what we're trying to take advantage of. So the overnight trading strategy is really to take advantage of that volatility. There's no real edge to it as far as like picking a buy or sell direction. You're not trying to take advantage of a, you're not speculating, which way the market's going to go. You're actually just willing to take the market whichever way it wants to go. Okay, that is the so we really don't care. Every day we're pretty much guaranteed to get executed into a trade, whether that be a buy or a sell or both, which has happened. Like last night, we got triggered into both directions. Um, but the ultimate goal is to capture the breakout of London. And when it breaks hard, right? And those are the days where we make most of our money. Okay, so basically the strategy for those that want to know how to trade this. So let's kind of move into this next spot of the webinar. I want to show you how this is done. So the strategy, what we do is I line up the Sydney session on a 15-minute time frame. You can also do this on a 5-minute chart. You can do it on an hourly, but I think it's best done on a 15-minute or a 5-minute. You're going to want a trading platform like TradingView. I'd prefer TradingView. I've only done it on TradingView, where you can draw things up. Okay, so if it's difficult for you to draw things on MatchTrader or DXTrade, or if it's difficult for you to do your analysis on the dreaded MT4, which is very difficult to do analysis on, then yeah, you're going to want a more prolific platform like TradingView. Okay, and TradingView is actually free. Everything you need to be able to do with the overnight trading strategy can be done on the free version of TradingView. Although they have I use the one that's like, I can't remember what it's called. It's like $12 a month or $13 a month. And I think it's called their Essentials plan. Anyway, that's what I use, because if you don't get it, that you're going to get ads that pop up on your TradingView chart, which are kind of annoying. So I obviously I need to pay for that. But you can actually do this for free if you're kind of on a tight budget and you don't want to pay an extra $12 for something. Um, but yeah, I would highly recommend TradingView. It's kind of like the place to draw things out on a chart, because you need to make this visual, and you're going to see why in just a moment. You have to be able to visualize the trade when you're trading the overnight trading strategy. Okay, so I use this thing called sessions. This is an indicator I found on TradingView. I'd also highly recommend that you get this. It's free. You just go into indicators in TradingView up here on a chart. You just pull up the euro dollar chart, and then you just type in sessions. Okay. And this is going to give you a bunch of options. I use this one called Sessions on Chart by Aurochs. I've also used the one called Sessions by LuxAlgo. That one works great too. In fact, there's several different ones you can use. You just need one that can separate the 4 different sessions: London, New York, Tokyo, and Sydney. What I do is I just light up Sydney. And again, as a reminder, Sydney is the session that is open just before London opens. Okay, we're actually in the Sydney session right now. It opened about 2 hours ago, and it will be open for the next 5 hours and 45 minutes. Okay, so it closes at 2 p.m. Eastern, or sorry, 2 a.m. Eastern is when this closes. And so I usually go to a currency pair like the euro or the British pound, and really any variation of the euro or pound would be fine. I prefer the euro dollar because the euro dollar is the most traded currency pair probably out there. It's the most popular, iconic Forex pair. And it is also a pair that will, in fact, receive quite a bit of volatility when the market opens. It's also a pair with one of the lowest spreads. And so I think, in my opinion, and also I've done some back testing too, comparing the euro versus the pound, I think the euro is the better currency pair. That's just my opinion. I've always done it this way. I mean, I've tested the pound with some success. In fact, it does work if you ever want to do that. I just prefer the euro dollar for spread purposes and popularity and all that kind of stuff. So, and then obviously the reason why we're choosing the euro right now is because this is a currency pair that shouldn't, in theory, well, and it's not just a theory, but it's a fact. generally speaking, you're not going to see a lot of volatility on the euro dollar during the Sydney session, which we're in right now, because those that live in London and Europe, whose currency this is, you're not going to see a lot of movement on this pair because the people who primarily trade this and utilize this currency aren't going to be awake to trade it, right? And so I like, but nonetheless, it still has movement. There's still movement that happens, and so you're going to see why this is important in just a moment. But you're trying to encapsulate the range of whatever that market is for the day. Okay, so we call this the Sydney box or the Sydney range. Okay, you'll often hear me talk about this, but basically, what you're trying to do is you're trying to come in here and you're going to draw a box around the Sydney session. Let's do this one right here. This is one from 2 days ago. I'm just gonna draw. Actually, let's find one that's like um, I want to find one that's actually kind of a tighter. Not news. That was a news day. I don't want to do one there. Just want to find a really good example of what we're trying to do here. Um, yeah, like this one would work. Sure. Okay. So basically what we're doing is we're coming in here and we're boxing up this Sydney box. And we're doing this every day, um Sunday through Thursday night. It's 5 nights a week. Okay. Sunday night through Thursday night. You can't do this on Friday night. You can't do this on Saturday night because the market's closed on those days, right? Um, so you come in here and you draw a box. And I have these quick tools on TradingView that I like to have. You can get these, by the way, when you go to the not the full screen mode here on TradingView. You can grab these by going to the left-hand side and starring these different things. So I've starred the arrow, the marker, or this arrow marker, arrow, circle. Right here, you've got your rectangle, which you can star, which I've done this, and so on. Um, I also use these things called projections, which are right here, long position and short position projections. And I've got those started up here because I use these tools like many times a day. So that's why I have them right there. It's part of my routine, right? Okay, so then what we do is we come in here and um, we got to draw the box. Okay, so once you've got, by the way, it's so much easier if you use something like the sessions indicator on TradingView. So much easier if you use that because then it'll just highlight exactly the area where you need to draw your box. Now, for those of you that don't want to use this and you just want to know when this is, Sydney opens at 6 p.m. Eastern every day, Sunday night through Thursday night. Okay. Five nights a week at 6 p.m. Eastern. So write that down or make a mental note if you're not going to use this indicator to this free indicator to do this for you. Okay. And then what you're going to do is you're going to once you've drawn this up, you're going to draw your box here. Oh, by the way, so it opens at 6 p.m. Eastern and then it closes at 2 a.m. Eastern. It's open for 8 hours. Okay. Pretty much every session's an 8 hour session. London is an 8 hour session. Um, New York's an 8 hour session. Sydney, yeah, everything is an 8 hour session. Okay. Okay. So once this is done, I use this box to highlight this. And because this is really important because you're going to be using this box to take the trade. Now, now you for many of you, like if you live on the East Coast, it's hard to stay up till 2 a.m. Eastern. In fact, I wouldn't recommend it. Even it's hard for me because at 12 a.m. That's when Sydney closes. And I've stayed up till 12 a.m. many times to do this, but it's really not good for the health and it's not a good long-term solution. And so because the market usually doesn't move a ton in this period anyways, just do this when it's most convenient for you in the evening in the United States. Okay. So if you live in the United States, just do it, between your 9 and 10 o'clock. I don't care which time zone you live in. Just do it between your 9 and 10 or between your 9 and 11, just whenever it's most convenient to do it. Okay.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
That's all that's required. Okay, so if your box looks more like this, like a couple hours earlier, that's fine. That's totally fine. You don't need to wait till the very end there to do that. Your results might be a little bit different because you're not waiting till the very end, but I don't think it makes a huge difference to stay up. For those of you on the east to in the East Coast to stay up till 2 a.m. That's just not doesn't make sense and doesn't really give you any utility to do that, right? Okay, so once you've done this, well, actually, one other tip I'm going to give you guys when you're trading the overnight strategy is after you draw your box, I like to add a little padding on this. And so what I mean by padding is if this is the high of the Sydney session, just add a pip or two on your box. I like to do this to avoid any manipulation or broker spreads and things like that. So just give yourself a pip or two or whatever that looks like. You can measure this actually by using the measure tool on TradingView. Or I'll measure from the top right there to that high. Yeah, I've got about a pip and a half. That's perfect. So anything between a pip and 2 pips is perfect. I'm going to add just a little bit more there too. Okay. And so the low of the Sydney session is right here. Okay. So there's your high and then there's your low, right? And then you've got your box. This is like the most important part. So you really got to get your box right. You really do. Okay. The next thing you're going to do is you're going to draw your projections. So you've got your long position and you got your short. I'm going to do the long position first. I like to go up to the very top right corner of my Sydney session box, and I'm just going to draw my projection. Okay. But I'm just going to click once and we'll go there. First things first, I'm going to bring my stop loss to the other side of the Sydney box right here, and I'm going to drop it and leave it right there. Then what I'm going to do is I'm going to drag my take profit up 5 times whatever this loss is, potential losses. So if you actually hover over the projection, that's why I love this on TradingView. If you hover over this, it'll tell you what my stop loss is right there in pips. It says 13.4. Do you see that number right there? 13.4. That's how many pips I'm risking on this trade. That's the Sydney box. So in that 8-hour period, the euro dollar from its highest high to its lowest low moved 13.4 pips. So that will be your stop loss for the day. So that's how you figure that out. but that's why I say it's super important to draw your box out correctly, because once you've drawn your box, that's where you're setting your stop losses and your entries and all that. It's very important. Then what I do is I like to put a target that's 5 times my stop loss. It's a very ambitious take profit. And a lot of people have asked me, why do you do a take profit that's 5 times? The market often won't go there. And that's a good point. There's going to be a lot of the time, in fact, most of the time that you win a trade, you'll close it out manually because you won't hit the take profit. But there are several times in a month where the market will just really rip in your favor, and you gotta hit that target. You gotta milk the whole opportunity, because and you'll see why in just a moment. Another thing that's important to know as you guys learn the overnight trading strategy, and we're going to get to this part. This is the fun part's coming, trust me, where we talk about the statistics and the how to on trading this. But the strategy, for at least in my experience, out of 22 trading days in a month on average, 21 or 22 trading days in a month, you're going to make most of your money in about 3 or 4 days, maybe even just 2 days in a month. Okay. So, like your paydays are going to be few and far between. It's not like you're getting paid every single day. It really is like a paycheck at a job. Like, you're not expecting your employer to pay you, or if you own a company, like if you're doing some kind of construction job, you're going to get paid all at once on one day for 6 months worth of work type of thing, right? So that's the way this is. It's the same similar thing, right? Like in a month with an employer, you might get paid 2 or 3 times. It's the same thing here, right? You're going to have your multi-thousand-dollar wins in just a handful of days. And you'll see how that plays out as we go through here. But you got to put those targets really ambitiously, because the few nights where you do hit those targets, it makes all the difference. But you will see very soon as you trade this that a lot of the times you won't hit that target. Okay. So, but that's okay. I'm just telling you how to do it though. Okay. And then you got to place a bracket trade. So we don't stop here. We don't just place a long position. We also place a short sell stop order. So for those that are kind of confused so far, let me see if I can shed some light on this. What we're doing is we're setting up what's called a bracket trade. So this is basically a trade where when the London market opens, if it wants to go up, we'll buy. If it wants to go down, we'll sell. So then what I do is I set up, it's like a butterfly, right? Which is like spreading its wings both directions, and we'll go with it, whichever side it decides to go. Okay, so you're going to set up a sell order, a sell stop order at the bottom of the city range. And then again, this is every night, Sunday night through Thursday night, 5 nights a week. And you're going to put in your um, sell stop order, and this is going to have a five, again, a take profit that's 5 times your stop loss. So, and you can see when you use these projection tools, you can see that when I get that number to jive right at 5, you can see it says 5.01. That's close enough. That means my take profit is 5 times whatever my stop loss is. Okay. So, like I said, we'll just take the trade whichever way the market decides to go, right? And so, um, in fact, I should do a rewind. In fact, let's do a rewind to here. So this is where you would set everything up, right? Okay. Oh, this is perfect. Yep. We'll do a rewind to here. So this is what your trade would look like. This is on September 5th. I just use this one as an example. Um, there you go. There's your consolidation. There's your Sydney box. Then you put your buy stop in, your sell stop in. Now, I'll teach you in just a moment like what lot size to use and how to figure out your lot size, all that kind of stuff, and how big of a trade you should take. That part's coming, but I got to make sure everybody's on the same page, at least as far as the mechanics and process of setting up the trade. So this is how you set it up every day. It's basically just a big butterfly that you're setting up. Bracket trade will take whichever way the market wants to go. So then you go to bed, right? And then we fast forward. Let's let the markets do its thing. Boom, you trip into this buy trade, and you'll get triggered into a buy. And then, if the market goes up, you'll keep making money. If the market goes down, you'll lose money on that trade that you just got triggered into, right? So now let's see what happens. by the end of the trading day, which takes us to about here. Okay, so this would be a new Sydney session right here. This is about the end of the New York close. So, kind of a wild ride on this September 2nd. So the market triggered us, went up in our favor, went against us, went up again, went down, but ultimately ended in profit. Okay. So when you get to the end of the New York's trading session, that's when I'd want you guys to close. Now, not everybody can do that. Like I've talked to several people this week on coaching calls, and some people have indicated like, "Hey, Steve, it's very difficult for me to close at the end of New York because I'm getting kids home from school or I'm coming home from work or whatever that is." That's okay. If you can't close it right at, an hour before the New York close, that's okay. That's when I'd like you to close. The next most preferred time I'd like you to close any open trades that you have would be just in the evening, just whenever you can, come home after the New York close, sometime during the beginning of the Sydney session, which is in the evening here in the United States. Go ahead and close it then. Um, if you can't do that either, um, I guess you could close this in the morning. I'd prefer that you'd leave the trade open just because statistically speaking, and I've done some back testing, it does seem like it makes sense to hold the trade into the afternoon. So I'd prefer that you do that. Um, but anyway, there you go. So a lot of the times you're going to have trades that close, no, that you'll have to close manually. Now, some days you're going to set this up and the trade, like I said, maybe a couple times a month, this trade will go straight to the target and you'll wake up in the morning to a pile of money. Okay. Like it will absolutely be a payday. Like I've had trades in prop firm accounts where I've woken up to the profit in those accounts where I could buy a small car, because it's just so colossal, the profit. It's kind of awesome when that happens. And it is a few times a month. So you just have to keep churning every day, to be patient to get that. And you'll see as I explain this, you'll see it here in just a moment. Okay. So we're about done here. Any questions so far on this? I do see some other questions in there. I'll get to those. But any questions on the mechanics of setting this up? So real quick, before we move on to the next part of setting up your sequence multiplier and using the lot size and all that kind of stuff, there's basically three scenarios that could happen when you take these trades. So one scenario is like this, where you wake up and this is pretty common. You'll wake up and you'll see a profitable trade. You'll be like, oh, great, the trade triggered. I'm up a little bit of money. Great. And then you'll close it later that afternoon. Okay. That's one option. Another option is like the trade could go up, be super profitable, and close you out for profit. And again, that's not as common. It happens like once or twice a month. You'll basically hit your target by the time you wake up in the morning, and fantastic. Another thing that happens, and this is very frequent, this will happen about 2 to 3 nights a week. So this is like the norm. The norm is the market will go up, trigger your buy, and false breakout that way, and then it will go down and trigger your sell, false breakout that way, and then come back up. So you'll actually lose both ways. It's super insulting. Okay. So like it's not fun. That actually happened to us last night. But it will happen 1 to 3 nights a week. Okay. So just like if you wake up to that and you're like, what happened? What did I do wrong? It's like, no, that's normal actually. That's super normal to get whipped both ways. So don't let it affect your day. Like definitely just log it in your journal if that happens and come back the next day. But just know that that is pretty common. Another thing that could happen is you could have a trade. This happened on Friday. Actually, I remember this on Friday. So the market came up, triggered us into a buy. I think it was. The buy was profitable for a brief period while we were sleeping, and then it kind of just melted away by the end of the trading day. It didn't hit the stop loss, but it did lose a little bit. And so I ended up closing it for a loss, even though it wasn't a full loss. So there's another scenario. And that'll happen once a week, maybe twice a week. And then expect a couple times a week as well to just have winning trades. I think you should expect maybe once a week to have a pretty big win. And then maybe another trade during the week that's just a win, but not a huge win type of thing. That's kind of the expectation. Those huge wins, though, you'll see here in just a minute how this works, but those huge wins are what make the strategy profitable. And you have to stay diligent to keep up with it. Okay. Let me answer these questions and then I'll move on to the next part. Roger says, when we go bust on the Reaper, do we reset and wait for 3 more losing days on the half? That's right. Yep. And we're going to talk about the Reaper version of the strategy in just a moment. And we'll talk about what bust is too. That's actually next. And then Lee says, I'm doing the overnight strategy with the USD JPY in addition to the euro dollar. Do I close USD JPY near the close of New York 2 like the euro dollar? Oh, that's a great question. I actually think that's a good idea. Yeah, I think that's a great idea to I don't want to confuse everybody, but what Lee's referring to is there is a way to do this, not just for the London Open, but you can actually trade this for the Asian Open too. So, like if you want to do the Tokyo or Sydney Open, either one, typically people do it during the Tokyo Open, which was just like an hour ago. You could have set this up for the Tokyo breakout. Um, I do recommend that you pick one or the other, or if you do both, that you do them in separate accounts. I think Lee, we've talked about that, but for others that are wondering if you want to do that, there is a way to do that, and I'm happy to teach that in another webinar. I just got to get through some of this stuff, but yeah, that's a great question. Okay, awesome. Okay, so I'm going to leave this here. If we need to come back to this, we'll come back to this. But I need to go to the next part. So let's go over the sequence multiplier. So this is what makes the strategy tick. Okay. So if you were not to do this, it probably wouldn't make a lot of sense to trade the overnight trading strategy just because the market is almost perfectly random. Okay. And in fact, to illustrate this, in the last 4.5 months, the strategy has only made 495 pips. Okay. Which is really not, I mean, it's a decent amount of pips, maybe over like, say, a month, but it's not like a ton of pips as far as, I mean, you'd probably want to make more than that. And pips are very subjective and they don't really mean much necessarily because it doesn't really tell the truth of everything of the strategy. Dollars tell the truth though. And so I'm going to show you how this works. So, and it's done very well from a, from a 4 month perspective, 4.5 month perspective. As far as making dollars go, it's done very, very well. Which at the end of the day, that's what matters, right? Is how much you're making. So, okay, so the sequence multiplier. What this is it's a modified. It's not a martingale necessarily. I like to call it like a modified martingale, where you are increasing the stakes depending on what the result was. Like if you had a losing day, the next day you come back and take a slightly larger trade. You're not doubling like you do on like a roulette table. We're not gambling. We're not doing any of that type of thing. Where like if you bet black and then black doesn't work, you bet white double the size with the hope that if you do hit white, you get your money back plus some. We're not doing that in that sense where we're doubling and with most martingale systems, there's no end in sight. There is an absolute end in sight to this multiplier. So what I do is I start off with, I actually use this, I've adopted this, what we call 1.5 multiplier. And so when I take the trade I just showed you every night, the little, that bracket trade, the butterfly, this is how much risk I'm taking on those trades. So the first trade, like if I'm starting new, if this is my first night trading the overnight trading strategy, I'm using 0.25%. So a quarter of 1% of my account I'm risking on each trade. Okay, so the buy stop and the sell stop both have 0.25% risk. If those trades lose, the next day I come back and I risk the next step in the sequence multiplier, and I'll take the trade again then following day. So if tonight's Tuesday and we lose at 0.25%, tomorrow's Wednesday, we'll use 0.38% per trade. And then if that day loses, we go to 0.57. And if that day loses, you go to 0.86, all the way up to 1.94% of the account on each trade up to 6 days. So 6 days is the most. And the reason why we have it at 6 days is because statistically speaking, there should be a major breakout on the euro dollar at least one in 6 days. Okay. Um, and you should be able to hit that enough times to make this strategy very, very profitable. And in a similar sense, you are trying to make up for previous day's losses, just like you would with any strategy, right? Like if you're trading any other strategy, if you have a losing trade, your hope is that the next trade makes back the loss plus more. Yeah, I mean that's normal, right? So there, I don't see how that's too different. However, we do put caps on this, and I think that's what makes this appealing to a lot of people, including myself, is there is an end in sight. Like we aren't going to completely destroy, like if like you could see how the losses could stack up here if you don't get a win in time. But there is an end here. So we're not going to completely decimate our account by just incessantly risking more and more money. We're going to do it within means, within probabilities. And then if we don't hit that win within that period of time, then we would go ahead and terminate the sequence. And we call that bust. So if you hit bust, that means that you were not successfully able to get a win within 6 days. Okay. And then what we do on those days is you just restart the sequence with the beginning multiplier. So you just go back down to 0.25% again. All right. And then you just restart. Typically, if you're on this 1.5 multiplier, if you were to hit bust, the risk involved is usually anywhere between a low of 6% max loss and up to 11% as an absolute total, that would be like you lost every single trade every single day on both sides. It would be a total destruction, would be like an 11% loss of your account. So that is possible. So if that is like, oh man, I can't afford, an 11% loss, which again, it's not likely. I mean, it has happened to us before, but I mean, and you can lose that. The last time I hit bust, I lost about 7% of my account. And up to that point, I had made like 30 or 40% of my account, and then I had lost seven. So restarting a sequence after I had already made 40% or 30% didn't feel terrible at the end of the day because I had already made so much. And then I'm already back to making money again. But if you're like, oh, that's too much risk, you can use what's called the 1.25 multiplier. So this is a little bit of a lower risk setting. Um, and it starts also off at 0.25%, and then it increases by a period of 1.25 each time. And you get up to 10 days to get a win. So you've bought yourself an extra 4 days to do that. Not very many people use the 2x multiplier except on the Reaper. The Reaper version of the strategy, which you'll learn here in just a moment, is the only time we use the 2x. I don't use that for any other. There's just not enough days here to be able to get a win, and it's just too juicy. There's a lot of risk involved, very rich um, um, as far as changing your lot size up here. And so I prefer not to use this. And so I would not recommend that you use this one, although I do know like one or two people that are using this, and it's a roller coaster, that's for sure. When the wins are there, it's amazing. When the wins aren't there, it's not fun at all. Okay. So okay, so that's the sequence multiplier. Let me show you how to do this real quick, and then we'll move on to the Reaper because I got to get to that in the last, 10 or 15 minutes of the call. But let me show you how this is done. So like if I were taking this trade tonight, I'm going to use the lot size calculator that we have on the website. You can go to free tools on tradingwithsteve.com. Then you go to lot size calculator. Okay. And then right here, you can figure this all out easily. So you're going to want to have access to the sequence multiplier, which I actually give out a journal. Let me actually pull that journal up. I've got it over here. I give out a journal for free that you guys can use. In fact, let me just pull it up. Yep, here it is. So you can make a copy of this journal. Here's the link. I'm going to give it to everybody in the chat box here. This is a journal that you can use for yourself. So you can keep track of your sequence. You can keep track of your trading results. This is what it looks like right here. All you got to do with this link I just put in the chat box is you just have to change your account size in here after you make a copy of this journal. And then each day you're just putting in the percent risk that you're risking. So the step you are in the sequence, you're putting in how many pips you made, how much money you made or lost. And then this will just keep track of your results for you. You don't need to do anything else. And then obviously you have the sequence multiplier as a reference for you right here. Okay, so let me do this with you guys. So if I'm taking this trade, this particular trade, it has, as you know, a 13 pip stop loss because that's the Sydney session range here. Okay, I'm going to go to the lot size calculator and I'm going to type in 13 pips. Okay, that's easy. And then you're just going to put in the account balance, whatever your account is. Let's say it's $100,000. Make sure before you get here that you've got the euro dollar, typed in, which I already do. Default currency is set to US dollar because that's what I'm trading in. Leave this right here, the 0.0001 pip size. Then right here, you're going to put in whatever step you are in the sequence multiplier. So since this is the first day, as an example, you would type in 0.25%. If you were on, day 2, you would type in 0.38. If you were on day 4, you would do 0.86. And that's the number you would put in when you go to the lot size calculator. Okay. You leave this default as well, the contract size, and then you click calculate. And then this will tell you how much risk or how big your contract is going to be. So if you use lots, it's going to be 1.92 lots. If it's going to be units, you're going to use 192,000 units and whatever that, just you could just type in 192,000 and that would probably be fine. And then it'll tell you right here how much money you're risking. Okay, you're risking $250, right? And so if you're like, okay, that's perfect. That's exactly what I was hoping to risk on this 100K account. Awesome. Great. Then, this will give you the detail of what you need. So then you could go take this trade with this contract size with the work that we just did over here, right? That is how the strategy is to be traded. And then every day you're going to come back to your journal and you're going to put in your results. So you'll say, okay, today was, this says May 1st, 2024. I did a 0.25% daily risk. Let's say I made 40 pips and I made $1,000. Okay. And then that will keep track of your results. It'll be like, okay, this is your ending balance for the day. This was your net gain. And then you could just keep adding those results in here and this will keep track for you, which is awesome. And it'll even give you all your detailed results over here. It'll be like, okay, this is how many winning days you've had, how many losing days you've had, total trading days, your win rate, everything's keeping track. So, and you're welcome to modify this however you want to, whatever suits you best. I just want to make sure you're successful with it. All right. So that is the strategy. That is exactly how I want you guys to trade this for those that are new. It works. So let's go over the statistics of the strategy. This is the fun part. So what I just taught you how to do since May 1st has made on a 100K account, it has a net profit of $25,000. So that's a 25% return since May 1st if you follow this through. It's taken 133 trades since May 1st. 71 of those were losing trades and 61 were winning trades with a win rate of just under 46%, which is really interesting because a lot of people will look at this and say, wow, a 46% win rate. Wow, good job, Steve. This other guy I follow from, India, he says he makes 90% win rate. Like that's the thing. Like win rate doesn't tell you everything you need to know. It's a very deceptive, win rate is a very deceptive metric if that's all you're looking at. It goes hand in glove with your average win to average loss. So your RR ratio. So your profitability depends on one, your win rate, but it also depends on how much you're making on those wins and then how much you're losing on your losses. Okay. So somebody who wins 90% of the time, but their average loss is 100 times or 50 times bigger than their average win, all of a sudden 90% winning doesn't equate to money because money in your bank account ultimately at the end of the day is what counts. Like no one really cares what your win rate is if you're putting money in your bank account. Okay. Right. And I think all of you would agree with that. And so, and so that's why, we're sacrificing our win rate in order to get bigger wins. So I want to direct your attention to this part over here on the right. You'll see that your average win on this is $863 on this 100K account. Your average loss is $384 for an RR ratio of 1.24 or 1 to 1.1 to 2.24. All right. So that's why this 46% win rate actually works very, very well. So the gross profit on this has been 52K. Gross loss is 27 for a net of $25,000. So it definitely works. And then I want to show you this. This is individual. These are all the individual trades that have been taken since May 1st. Okay. So you'll note in here, I mentioned earlier, the strategy in a month will give you about 1 to 3 major paychecks, maybe 1 to 4 major paychecks. And if you remember, there's 21 or 22 trading days in a month. So everyone tries to trade every day. I trade every day. But most of the money is made in just a handful of days. All right. And that's how everything, that's for every market for me. It's that way too. When I trade stocks, the same thing happens to me. Most days in stocks, I'm trying to keep my losses really low. And then when the big winning days come along, that's where the money is made, right? So you're just kind of churning until the big wins come along. So last major big win was for Thursday. I made $2,523 on this account. The following day, I lost $148, so very small loss. But then we come back, small win right here. And then last night, I had 2 smaller losses. I got whipped both ways last night. And then tonight, I'll be setting up this trade again on the second level of the sequence. As you can see right here, I'm on multiplier step 2 or 1.5 multiplier. And then I'll be going to step 2, which will be tonight. But yeah, look at the wins here, guys. So this is the big win right here on September 12th. The last major multi-thousand-dollar win I had was August 13th. That's actually a pretty big stretch. It was almost a month. That took me a while to get that win. The last major big win before that was August 2nd and August 1st. So about 12 days earlier, got a multi-thousand-dollar win. There was a decent win right here on July 29th. And then just a bunch of series of losses right here, smaller losses, right? There are little wins along the way, right? Little wins, little wins, little losses, little wins. And then here's a bigger win on June 20th. Here's a bigger win on June 14th. This was a massive win on June 12th. $6,000. That might be the biggest win of this entire, um, 4-month series. Big win right here on the day before that, plus $2,000 there. And then right here, yeah, plus 1,300. Here's a plus 1,800. Here's a plus 3,000. Here's a plus 1,300, plus nearly 3,000 there on May 9th. But yeah, much of the time you're either losing very little. You'll never see a loss, at least that I'm aware of, that's over $1,000. This was one that got close. It was a minus 860 on April 13th, but we won the other direction, and that made up it made up for that loss plus much more. So that is the strategy. So a lot of the times if you think about it, you're kind of taking little bites out of the market, little losses in the name of getting bigger wins. Okay. Most traders trade the opposite of that. This is how I traded for years. I've been trading for 12 years. The first several years that I traded, I did the opposite of this style where it was like I would adopt trading strategies that help me win every single day. In fact, I know how to do this. I know how to win every single day. I could make money every single day, but the problem is that if the wrong type of market condition came to me, 10 days later, I would end up losing everything I'd made in the previous 9 days, right? And that's just not profitable. It doesn't work. It's fun to win every day and you feel like you're being successful, but you're kind of deceiving yourself into thinking that you're profitable and you're actually not profitable at the end of the day, right? And so this kind of goes against our nature because a lot of us want to be winners, right? And so winning is where we feel like we're at our best. But like I said, the bank account doesn't reflect that. The bank account reflects when our average win is greater than our average loss. And this strategy does exactly that, right? Any questions up to this point with this? One last thing I wanted to show you guys because I got to get to the Reaper here. But the if you have a winning day, like for example, on like this was a winner right here on September 10th. It made $177. It wasn't a very big win. And you'll note here, actually, no, that's actually not a good example. No, this is a better example. So on September 9th, I made $486. But notice how that win is not big enough to cover the previous two losses I had from that Friday on the 6th. So when that happens, I actually just stay at the same level of the sequence the next day. So on September 10th, I stayed at the same level. Now that day was a net losing day, so the next day I go up to the next level of the sequence. So the only time you increase your risk the following day is if you in fact lost money. Since I lost money last night, I will be going to the next layer of the sequence. And then if we win today, if that win is enough to cover the losses from from yesterday, then I'll go ahead and default back to my beginning sequence. So you're basically following a sequence up day by day until you get a big, massive breakout win from the euro dollar. And if that euro dollar breaks out hard and you make a pile of money, then you go ahead and restart the sequence all over again. All right, I'm going to go ahead and talk about the Reaper. If you guys have other questions, hit me up with those. So here's the Reaper. So I know this is fire hose of information. So this is really fun though. Um, Reaper. So what is Reaper? So Reaper is this strategy, and I have just about 4 minutes to go over this, and that's okay because it doesn't take too long. It's the same thing. It's the overnight trading strategy. But what this does is the Reaper monitors the normal strategy and says, okay, if since we're likely to have a win within 6 days, there's going to be a big breakout day within 6 days. If the first 3 days wind up being a loss, then the Reaper's theory is that there's going to be a win in the following 3 days. So the Reaper is avoiding the first 3 days of losses, and then will come out to hunt on the last 3 days of a sequence, right? Which I've actually been very, very impressed with this. So I'll give you some examples here. So this was a period right here on May 22nd. It looks like there was a loss. I can actually see this just from the pips right here. It looks like there were losses here on the um, net losses here on the 20th of May, the 21st of May, and then 21st of May, both ways lost. And so on the fourth day of a normal sequence, the Reaper will begin its sequence. So it won't even start trading until the normal strategy has 3 days of losses. Then it will begin trading. So that's what the Reaper does. So right here, he took a trade both directions, lost both ways on the fourth day. And then on the fifth day, lost both ways. But then on the sixth day, the Reaper won. And this was a $10,000 win. That's pretty rare, by the way, but that was a huge win right there. Just single trade. When you woke up the morning, it made 10 grand. So with this, you're actually using the 2x multiplier. So you're doubling each day for just 3 days, but not more than that. It's just 3 days of doubling. And you're waiting for the normal strategy to get into a distress mode. If you view it as losing money for 3 days in a row, then the Reaper will begin a sequence. Right here, this is a win right here. So the Reaper took a trade here on May 30th. That means that the previous 3 days were losses. And then on the fourth day, it started a sequence, got a win right here. Boom, it avoided all the losses and just got a win outright. Here was June 10th. It began a sequence here. Day 4, day 5, and then day 6 got a win, and yep, it made 10 grand. So kind of amazing. These were just outright wins. These three ones right here didn't have any losses tied to it. Wins. And then this was the only time that I know of that the Reaper has gone bust is right here. So this was a period where This strategy, the normal strategy, went 6 days in a row and did not get a win. And so the Reaper went bust. And so to answer your question, Roger, from earlier, yeah, if that happens, you don't continue the Reaper. You let the normal strategy begin a new sequence again, and then you wait for that to have 3 days in a row of losses, and then you begin a Reaper sequence. So, and this is actually the most profitable version of the strategy. It takes a lot more patience. You're not trading every single day. You're actually just monitoring and waiting for the normal strategy to get caught in a whipsaw for 3 days, consolidation period for 3 days in a row. And then after those 3 days, you begin the breakouts. And then with the idea that you're on the cusp of a breakout. And within the next 1 to 3 days, there's going to be a big move. And then you're just capturing that move without the subsequent losses, which is super awesome. So, all right, guys. And if you guys ever want to review the statistics, all you got to do is just go to the website. On the website, you can go to overnight trading right here, and you can view the statistics of the Reaper, the overnight strategy. You can view um, the transaction history of every single trade. Super awesome. All right here. All right, guys, I'm going to go ahead and wrap up, give myself like 2 minute break, and then we'll join up again for the COT report webinar. Thanks for coming, guys.